What's up, guys? Damn Jamma here. I'm going to go over one swing trade that seemed to have a little bit of issues with some members and just how to kind of hold on for continuation and what it means to where you want to cut your trade, so on and so forth. And the first thing with this trade was a SoFi trade, is the trade overall that we're talking about. But one thing that's really important with swing trading is breaking down who you are as a swing trader and being aware of that, because if you're not aware of that, you're not there. The next step is literally pointless. So to break it down, we're going to identify the level where I posted the trade, so on and so forth, and go from there. So if we have the SoFi chart on, I'm going to put on the hourly chart here, and we're going to find the time of the alert, and we'll go from there. Let me look it up. And while I'm looking this up, I'm just going to talk a little bit about why it's so important. A couple things in general. Like if I have a lotto tag on a trade, which a lot of my tags lately are absolutely lottos, suffocating them with a super tight stop loss is not personally what I'm doing. I cannot tell anyone else what to do, but for myself personally, that's not what I'm doing, because it's so important to really hammer out and figure out what, in general, you're looking to accomplish in the trade before you take the trade. The trade cannot be a percent. Stop losses cannot be percent based. Stop losses have to be range based. Period, in my opinion. Of course, if something works for you that is opposite of that, that's fine. So anyway, this trade was alerted on 3/14. No, that's not it. Hold on. So far, 4/17. All right, so it was alerted this day here. So we're in this range. All right, so if we back up and we cut this off right here, and nothing exists past this point. So none of this has happened yet, okay? So this is the chart we're looking at. And if we're identifying our zones for our support resistance, it's a risk on trade. It was a lotto. It's Trump. It's Trumpinese time. Like we all trades are a few levels of risky. Of course, we know that. So that's the one I want to make gray. This one. There we go. So this box right here has not happened yet. I alerted this on this candle right here. All right. So it was alerted right here. All right. And the next day we pulled back some. And I've got the hourly chart on here, guys. So if we're taking this trade and we are identifying some stop loss ranges, some take profit ranges, so on and so forth, whatever it might be, and we're taking this trade in particular, and it's a lotto. All right, and that's right here is our entry. Let's use boxes. All right, and let's say that we say target one is going to be the 200. All right, so if we're right here, and this is our target box right here, if the 200 is our target for a trim, because we always want to identify those target ranges too, guys. I mean, you could just blindly take trades I alert all day long. That's fine. You can do whatever you want. But in general, identifying stop losses, ranges, this and that. So on the downside, we have two areas we're looking at here. None of this happened yet. We've got this low point right here. And then we've got this main support resistance right here that I already had on the chart, so I'm going to keep that. So those are definitely our two stop loss ranges we would identify, even if we tightened it up to right here. Let's say right there is like our stop loss range. All right, so I'm guessing the panic selling happened when we saw red the next day. which was right here. Let me see. I like SoFi. I'm just looking. All right, I said if you search SoFi, it's my favorite company, blah, blah, blah. All right, and then my next update was Tuesday. So literally 2 days later, 1.5 trading days later, and I updated it 20% up sometime that day. So the update was here. And then it was somewhere in here. I really don't know where. Let me see a time here. 11:38 a.m. All right, so yeah, right here. So here was our 20% update. It was probably right around here. Okay, so that was our update for a 20%. So we have our entry here, our panic selling here. This was our panic sellers here. And an update here. So day one, I'm on 15-minute chart. So 15-minute chart, not even like an hourly, but a 15-minute chart where we didn't even, and I'm just trying to break this down for you guys. All right, just so you could see it in like a true sense. We did not even have, I'm going to delete this box since we're not worried about it not existing anymore. We didn't even have a single 15-minute candle break itself below and stay below. We had one candle right here, but that with a higher low. And this is where, for me, it's like what gives? What are we really looking at for trades? Is it the second it gets red, we cut something? Is it you're playing with a 10% or a 20% stop loss and are you playing a 1-to-1 risk reward? This is a lotto trade. Are you in a small account? I can't answer any of those things. All I can talk about is with the actual chart. We have 2 identified points here, and I even made them tighter. I have this one here. I have this the low of that day. It was alerted. I have this low point here, and then I have this low point here. All right. And then right here, we didn't have a 15-minute candle close below it. We had one floating around that area, but still on it, and it immediately popped back. All right. So not only did we not have a 15-minute candle close and open below it, which I wouldn't even have sold it there, not on the first day, and not a 15-minute candle. I would have it at least an hourly first off, because it is a swing trade. And second off, oh, didn't mean to move that. We can clearly see on the hourly, we didn't have a single candle open and close below. Even the day we took entry, low a day. Secondly, if we took entry around 1088 and this is 1049, that's only 30 cents. It's only 2.5%, which is very, very minimal. And with the contracts we had in place, which we had about a month plus expiration on them, we had a 21% cut and 24% or something. 20, let's say 24 to 27% total down. Possibility. I don't think mine was that far down. Maybe I got a better fill. Maybe you guys got not as great of a fill. I don't know. I could go back and cross-reference it. But we don't have confirmation. I mean, that's the part I'm asking for with you guys here in general, is if that's how we're playing a swing. And it's okay if you're playing like that. If your answer to this is, I always cut every swing, even if it's a lotto swing, at 20% stop loss. But I can also tell you unequivocally, for me and my trades, a 20% stop loss on a swing trade with a lotto tag is never going to be the way I play it, first of all. And second of all, and we didn't even get a single hourly candle close below, candle open close below. Not even actually, we didn't even get a single candle. Yeah, we didn't have a single candle open and close below that low a day. So for me, on a regular trade, when it's 4+ weeks for expiration, because it was the 17th, so we have 4 weeks expiration. When it's 2 to 4 weeks expiration, I'm on a 4-hour chart. Right here. All right, and that was our entry, and this was all pre-market. I'm going to put on the 1 hour. The 4 hour is really tough to identify it. So, I mean, for me, I can't suffocate my trades like that. It's never going to work, especially in a market with heightened volatility, where it was a share position as well. Simply because we never lost trend. Because when I do go back and I talk in general about lotto trades, swing trades, trend, everything else, the biggest thing I talk about in general is never, ever, ever using the contract price as my stop loss, using the trend as a stop loss. And when I have 4+ weeks on a contract and we didn't even lose, like on the daily, usually I'll say a daily close below whatever point it is. Stop loss daily close below. For this trade, it would have likely been a daily close below low a day. Because as you could see what happened here, guys, you sold at the dead-ass stone cold bottom. We didn't open up red and down that much. You cut it at the dead-ass bottom overall. And that is what is going to kill trading overall, because we could clearly see this point here. We have that catch-all. I drew 3 different possible points, and I've got an hourly chart on. All right, and even if we had the tightest stop loss of the 3, which was this candle right here, never broke the trend there. We held all 4 candles, all 4 hourly candles. The second tightest stop loss here obviously never broke the trend there. Third tightest stop loss here, never even touched it. We are in a volatile market due to the way it moves. The range is here. It's a range-based trade. So if we delete everything on this chart altogether, all right, and let's pivot back to what the entry was. Here's our range, and here's our range. And we stayed within it. And for me, that's what I'm playing. And that's where, if we circle back and I talk about, I'm not going to get too much into this stuff because it is Skills Lab stuff. It's Skills Lab 2 stuff as well. That's where stacking probabilities comes in, because we've got to be willing to let trades play out within their desired range, which is very, very critical to do. And that's why, if it is something where, okay, it ended up losing this trend, and we ended up cutting it, say, down at below this wick low here. So we ended up cutting it down here when it closed, and the trade ended up, let's say, minus 40%. But we played the trend on this trade. And we say, okay, but we want more than a 1-to-1 risk reward on that. If we're letting it go this much, what's really our take profit range, so on and so forth. So if we put on our daily chart, and what are we really looking to do on this trade overall? Because we took our entry here. So if we took our entry here, and within a couple days, this was where our 200 MA was 2 days later. So even with that deeper stop loss, all right, because the MA is curling up because we were uptrending, if our target one was the 200, which we talked about, so right there, so let's say the 200 within 4 days, so it would be right about here, okay? And that was our entry and our exit. So then if our stop loss was that all the way down there, even below the wick of the candle, we go way down here. You can see we still have the proper risk reward there. We're not quite at 1 to 2, but that's just our trim place, is that 200. Obviously, I'm not looking to take profits within the first minimal move of the trade overall. But when you look at a daily chart, I even broke that down to the 15-minute chart, and we didn't lose trend. On the 15-minute, guys. Now let's flash. We got the daily on. It was the inside candle from the day before. The whole body of the candle was inside the day before. This did not lose trend, guys. We can't have one wick, one 15-minute candle, one hourly candle dictate the whole trade, because even letting it go down to this place here, up to here, we got like a 1.5 to 1 risk reward there. But ultimately, my target range on this trade was here. On the chart I drew, I was looking at this range right here. That's what we talked about for target range, was right here. Dip down, come up, and make a neckline. That's what we talked about. Are we going to fill out a cup and handle or head and shoulders pattern up to the neckline? So if that's our trim, and I had identified that our ultimate target was up in here, it shows the trade as a whole how I would play that. And every chart's not perfect. Every trade's not perfect. Every trade isn't going to have perfect lines and perfect how should I play it and perfect everything. If it was all perfect, no one would ever have to make a decision. No one would ever have accountability in their trades. And no one would ever lose. But to kind of be like, oh, it went 21% red the very next morning on something that on the daily, it definitely didn't lose trend. On the 4 hour, we didn't lose trend. On the hourly, we did not lose trend. We did not lose our zone. On the 15-minute, on the 10-minute, we did not lose the zone, guys. Do you see this zone? We bounced right off it. If anything, I should have been saying, let's double down right there off that bounce. So you guys got to play these swings however it works for you, and I understand that. But you also need to understand that if you continuously play percents over levels on swing trading, it's never going to be anything you can expand on, because being fear-based in swing trading takes balls in a way, especially in the Trump market. But also, we could look at the history of how the stocks play out and everything else. And if you're taking trades with proper technicals, when we look at this chart, and we're on a 10-minute. If we put on an hourly chart, when we look at this chart in this zone, and we remove anything about entry or exit, we would love to get an entry anywhere in this zone, even at the top. Anywhere in this zone taking entry looks cut and dry after the fact, doesn't it? Like, you know, and I'm not calling anyone out. It's just because I had two people, and one say I cut at 10%. I'm scared of the Trump market. And the other one say 21% was my stop loss. So I just wanted to touch base on it because I want to help you guys. It does not, a lot of people held SoFi, and I know that. It does nothing for me holding a swing that everybody else loses on. Well, it fattens my bank account, but it doesn't, that's not the point of what I'm doing here. You know, like I don't see, and I'm seriously looking for a scenario where it does make sense to close there. And I get it if you're like, I cannot let my swings go more than 22% down because I always cut them at 30% up. Okay, if that's the way you trade, I get it. But in another aspect, if that's the way you trade, and this is the pattern we're in, you can't even really take the trade. Like, you should be the one taking the trade on this retest instead. Like, identify this. We've got our chop range. We popped out of it. We retested it right here. Just take the trade there. Look at the trade. Be like, I know I play it tighter than Amy. She's playing, and you guys know me, and you know the freaking charts, and that's why I get a little blunt breaking this shit down, is because you know I play the anticipation breaks into a strong market. You know I love playing the strength breaks, not the bottom feeder. This is the bounce point. My bread and butter are these anticipation breaks where I could see it heating up, where I can see we're getting ready to break through. So it should only be a guide. Questions in the chat, please, guys. Questions. Like, does it make sense? Here's the thing, because I am a full transparency type trader. Does this make sense, or do you think that it makes sense more that that's where I cut it? People that might have cut it, like, do you have clarity on why I don't believe trend was broken? Do you believe that you need to keep being super tight in your trading because that's how you are with taking your wins? Like, I really want to know these things. I'm constantly trying to evolve into alerting in a way that helps for you guys. It doesn't matter to me because all that's going to do is piss everybody off. They got to look at us like, woo, our runners, you know, on earnings, because it was a lotto. This last day was a lotto because it was an earnings breakout, and we just we already trimmed heavily. I was down to 5 contracts out of 25. I was already out of most of the trade. And every single day it kept pushing, you know. Higher high, higher high, higher high. All the way through. Higher low, higher low, higher low, higher low, higher low. All the way through. No trend was broken. And the chat is stone cold silent, so I'm going to cut this off here. I don't know if this helps or not. Swing trading is not for the faint of heart. I mean, play the trend, not your portfolio. But you have to be aware of your portfolio if you're trading too tight or too loose as well. It takes really years to dial that in, guys. Thanks. I'll be back with more videos.